Portugal's tourism economy isn't just booming, it's reshaping the real estate landscape. As international arrivals hit record highs, hospitality-focused real estate is becoming one of the most resilient and high-performing investment classes in the country. From hotels and resorts to branded residences and serviced apartments, demand is outpacing supply in key regions like Lisbon, Porto, the Algarve, and the islands. For investors, institutional and private, the opportunity is clear: stable income, strong capital appreciation, and a strategic foothold in one of Europe's most dynamic markets. Tourism has become one of Portugal's defining economic pillars. In 2023, it accounted for nearly 16% of the country's GDP and supported over 1 million jobs. That makes it one of the top-performing tourism economies in Europe, even when compared to much larger countries. In 2024, Portugal welcomed over 31 million guests, including 19.4 million international visitors. Overnight stays reached 80 million, with non-residents accounting for nearly 68% of them. Tourism revenues topped 27 billion euros, an almost 9% jump from the previous year. And there's a policy backbone driving it forward. The national strategy, Turismo 2027, emphasizes year-round tourism, improved infrastructure, and digital transformation. Public and private investments are targeting transportation hubs, regional airports, and global marketing. Tourism's momentum is translating into tangible performance for the real estate sector, especially hospitality. One of the clearest indicators, RevPAR, or revenue per available room, continues to climb. In 2024, it rose another 7% from an already elevated 2023 baseline. Occupancy remains robust, peaking at over 90% in regions like the Azores and Madeira during summer. Even in the off-season, places like the Algarve maintain solid occupancy at over 43%. For investors, these aren't just good numbers. They reflect long-term value supported by real-world usage. Three key asset classes are attracting the most attention. First, hotels and resorts. These traditional assets continue to lead the market in transaction volume. With strong RevPAR and demand in Lisbon, Porto, and the Algarve, they offer institutional-grade returns. Second, aparthotels and serviced apartments. These flexible units appeal to both tourists and corporate travelers. Operationally lean, they offer extended stay potential and average occupancies above 75%, especially in Lisbon and Porto. Third, mixed-use developments. Combining hospitality with retail, wellness, or co-working, these projects tap into multiple revenue streams. They're aligned with urban planning trends and cater to evolving guest expectations. Each model fits a different investment profile, but all benefit from Portugal's sustained tourism momentum. Regionally, the performance is diverse, and that's good news for investors. The Azores led growth in overnight stays, with nearly a 10% increase. Nort and Setbal followed closely. Meanwhile, Algarve, Lisbon, and Porto remain dominant in absolute demand. Lisbon attracts both business and leisure travelers year-round. The Algarve sees high seasonal returns. Porto and the north are rising stars in boutique and wine tourism. And the islands, Azores and Madeira, are leading in nature and ecotourism. Emerging destinations like Osten Vale do Tejo are gaining momentum too, offering first-mover advantages for early-stage investments. Portugal stands out as a stable, investor-friendly environment. In 2024, RevPAR jumped to over 83 euros. Lisbon and Porto continue to offer yields of 6% or more, outperforming peers like Madrid. The country's new tax regime, NHR 2.0, allows for a flat 20% tax rate on qualifying income. And foreign direct investment continues to pour in, with over 13 billion euros recorded last year, more than 3.5 billion euros in real estate alone. Legal transparency, regulatory ease, and capital protections further strengthen Portugal's position as a safe and profitable investment destination. Looking ahead, the trajectory remains bullish. By 2035, tourism's contribution to Portugal's economy is projected to hit €74.6 billion, over 22% of GDP. Employment in the sector will grow to 1.4 million. In 2025 alone, the industry is expected to contribute more than €62 billion, supporting 1 in 4 jobs nationwide. Credit agencies have taken notice. S&P recently upgraded Portugal's rating to A+, citing tourism as a key pillar of resilience and growth. Tourism real estate in Portugal isn't just a short-term play, it's a long-term strategic asset class backed by strong fundamentals, smart policy, and consistent performance. For investors seeking stable, income-generating opportunities with real growth potential, Portugal's assets deserve serious consideration. To move with confidence, partner with experts who understand the landscape. Broker Estate provides institutional and private investors with the local insight, market access, and investment support needed to navigate this high-performing sector.